Well, the demand to slash the import duty on gold just got stronger, with the Congress President Sonia Gandhi writing to the Commerce Ministry seeking a relaxation in the 80-20 scheme on gold imports. Sources tell ET now that the UPA chairperson wants some import curbs lifted against the backdrop in rise in smuggling. Remember, most of the industry participants have been asking for that, and today you have seen that letter go from the Congress President to the Commerce Ministry. Vijay, first of all, what's your reaction to this one? Because the industry has been demanding. We have been talking about most of those association presidents on the channel as well. Do you think this time around they've got it right?
I think so, Manisha. This is something that I've been hearing on the street in Zaveri Bazaar for at least a week or 10 days. And now finally, since you have the CAD sort of under control and the industry has been lobbying fairly hard, I'm hopeful that the duty cut will come in, especially since a heavyweight is now pressing for such a action. And you will see rationalization of import duties and therefore some fall in the unauthorized channels through which gold will come in. I think the industry is likely to welcome it, so will the commodity markets.
Fair point. Let's also get in Mohit Kamboj, President, India Bullion and Jewelers Association. He joins us on a Mumbai phone line to react on that story. Mohit, hi, welcome. What's your sense really on Sonia Gandhi writing a letter to the Commerce Ministry to ease the gold policy that we saw initially coming in? Do you think it's a populist measure ahead of elections really?
Hi Manisha, from last 9 months we are writing letter to Finance Ministry. Yesterday also we wrote a letter to RBI regarding reducing the import duty and to make some changes in 2080 policy. And we have also put our very deep thought in that letter also, that in the March 2014 balance sheet of all the banks, many accounts are going to be NPA related gems and jewelry industry. We are not getting gold in the market due to this 2080 policy. And today UPA chairperson has also written a letter to this Commerce Ministry regarding reduction of this custom duty. If it happens so, if they do so, we welcome UPA move, but only letter won't work. They should act upon this and they should make the changes to avoid NPA non-performing asset accounts in 2014 balance sheet.
Fair point. Mr. Kamboj, as we have been talking about all these months, as you pointed out, since the last 9 months, it has been a difficult time for the industry now. Now that the UPA president herself has written, do you think it will carry more weight and you might see a change coming in sooner?
If it happens so, because UPA chairperson talks different, Commerce Ministry talks different. Last month also, you must have heard Commerce Ministry, Anand Sharma, he has also said to reduce the custom duty and that import to export has reduced in India of gold jewelry. But this Finance Ministry doesn't agree with them. He said, no, I am not going to make any changes. First of all, there are too much conflict in UPA government itself. What Commerce Ministry say that Finance Ministry doesn't agree. When Finance Ministry says, then RBI doesn't agree. And at end of the day, the people who are in the jewelry industry, they have to suffer. So first of all, they should consult themselves that are they helping the gems and jewelry industry, or they are on the way to urge to make it bad. They had made it difficult for the jewelers to work now, and in March I think things will be difficult for the jewelers, and this industry will finish as soon as possible if they will not change these policies.
Mr. Kamboj, while this is an absolutely positive step that has been taken today during the day, but as many measures have been coming in recent few days, do you think it's yet another populist measure ahead of elections?
Yeah, it's all. I tell you one thing. When we wrote a letter to Finance Minister, I think 6 months back, we told that 50 lakh workers are associated with this industry, and this 2080 policy will affect their wages. He clearly said that I am not worried about 50 lakh people. I am worried about India, total Indian population. So that point of time when the elections was very far away, their words were different, their thoughts were different. And today when they are seeing that their government is going and this industry is in not support with UPA, and now we are supporting as a whole industry, we are supporting NDA and we are supporting BJP. So they are taking their tricks to how diamond jewelers or gold jewelers come together with them and this whole strategy to get votes and all. Nothing beyond that.
Fair point, Mr. Kamboj. We take your point. Thank you so much for joining us and giving us a sense on what's happened really in the markets today. But that clearly is showing on the price as well. With the gold prices trading nearly 1% up in the international markets, you have seen a turnaround coming in for the Indian markets as well. 29,180 is how that one is holding. Let's get in then. Ajay Kedia, he's MD and Research, Kedia Commodities. He joins us on a phone line. Joining us in studios is Vijay Bhambani, who's author and CEO at BSPL India. Vijay, first of all, do you think the gold price is reacting on the upside in the international markets perhaps comes because of this too?
Yes, Manisha, almost definitely, because India has been a very major consumer of gold, both at the retail as well as wholesale level. And there is exuberance in the international market that demand from India, official demand from India, will now start to perk up, and therefore you're seeing a 1% rally in the international markets in US dollar denominated prices. In the absolute near term, you might see some amount of price volatility in the domestic commodity markets, because there will be anticipation that the kind of artificial shortage, if you want to call it that, of gold will now ease. But what will happen at the street level is that the undue amount of premium that was being charged in the physical segment over the commodity markets will now shrink. And that premium shrinking is actually a very healthy sign, because price discovery mechanism will now get more efficient. And over a period of time in the domestic markets also, you might see gold prices starting to show signs of stability.
Well, one sector which really hasn't done so well has been the base metal prices. And Ajay, what's your sense now coming in for this? There has been a Chinese slowdown. The Fed tapering concerns are in the market as well. So the kind of gains that we saw for much of Jan 2014, do you think that's going to go soon now?
Good evening, Manisha. If you see base metal pack, no doubt since last 1.5 months, market is trading in a very tight range. No doubt some gains has been witnessed in the copper, on LME, and even on nickel has crossed 900 level because of Indonesian update. But timing, all the fundamentals are totally mixed. From China, there is been news of some slowdown going on. Simultaneously, US data are quite supportive. So overall, I think the choppiness will be continue for next 1 week session. But everybody is eyeing on Chinese holiday, because since last few years we have seen that whenever the Chinese market goes on holiday, some buying takes place in the market. And currently in international also, copper LME is well traded about 7,200. So overall, we expect the choppiness will continue in case of base metal, but better buy on dips will be good. Like copper, once again, if we get around 450, 452 level, that will be a good sign. But for intraday purpose, one can take short position and go in base metal.
Ajay, how would you look at the crude oil prices? Because the gains there have been strong. Markets are awaiting the US weekly inventories data, and the further direction perhaps would come from there. But ahead of those numbers, how are you treating it?
If you look crude oil chart, it is very much surprising, because on 31st of December we have seen very good gains and close around $100 and above. Afterwards we have seen a very good fall up to $92 because of concerns which we previously we have seen, supply concern that has been totally diluted. And now I think that jump is seen after the IMF update and OPEC update. Timing, the jump can be continue up to $97, but overall we see in quarter one of 2014 the supply concern what previously we have seen that will continuously reduce the can subside the demand. So overall, for an intraday purpose, one can go in a long position targeting 6,100 for a shorter period, but immediately the range will be $90 to $98 for next 10-15 days.
Talk about the agro space now, which has been quite choppy as well. While the edible oil space has seen some gains coming in, there has been profit taking in most of those grains. Vijay, the wheat prices, as you have been pointing out, that might see some correction in the, you were saying it was making perhaps a peak there. Would you say that profit taking that has started now may continue?
I think so, yes, Manisha. 1625 was the level I talked about. You're getting there now, and probably another 1.5% in that level will also be reached. We are nursing ample amount of stocks of wheat, and the January futures, which were unable to even test the 1700 top, which I talked about, and the February futures were quoting at a discount to Jan, while Jan futures were still on. That basically told you that demand for wheat in the financial futures market was ebbing, and that is likely to lead to lower prices. At this point in time, I think 1666 is a level that the bulls will be unable to take wheat above. And on the downside, 1620 to 1625 is what I'm targeting.
Vijay, I want a reaction really on, because the crude prices are trading at a 3-week highs. The natural gas prices were trading in an upper circuit on MCX today. Where does that leave a CPO or an edible oil space then?
Anisha, where natural gas prices are concerned, I talked about 285 to 290 band even when the price was at 270. So I feel natural gas prices are now heading towards an exhaustion mode. I would be surprised if the prompt month futures went above the 306, 308 levels. I would actually seek short selling opportunities. Where crude oil is concerned, I think crude oil is also likely to run into a resistance, maybe a percent and a half from here, which tells you that once crude oil and natural gas prices start coming down, CPO prices should also follow suit. The only wild card would be the USD INR. If the rupee was to weaken against the US dollar significantly, that would provide a cushion to CPO prices, for which I think CPO prices are likely to head lower in the absolute near term. I would seek short selling opportunities on crude palm oil. 534 to 535 is a level where one can start venturing out short positions.